Hope everybody's having a wonderful weekend. Let's get this Sunday rev up going. The first thing we want to talk about is FOMO. Most traders think that FOMO is missing the trade and then entering the trade afterwards by chasing it emotionally. Over the next week, as we go through this week, what I want you to think about and write down are these other types of FOMO that we're talking about. Another perfect example of FOMO is opportunity cost. You watch the market go up 107 points, and then you want to take the first red bar short. Why? Why would we do that? Because we fear that we're going to miss the next opportunity, and we believe that the next opportunity is going against the entire world so we can be right. The next thing I want to talk about is very, very simple definition of FOMO. Fear of missing out. It can be any activity. We want to break it apart in three different things. There's a feeling or an emotion, and then the lack of action, and then the knee-jerk reaction. It happens in all different types of scenarios, not only in trading, but in our real life too. I used to wonder what all my friends were doing when I would play outside. I'd be grounded, and I would have FOMO because I couldn't wait to be ungrounded, right? That's a type of FOMO. That's something we don't really think about. When we were kids, we FOMO'd all the time. We just don't ever think about it. It wasn't brought to our attention. Our parents just told us no and distracted us to do something else, right? So let's go back into our trading, right? Being in the simulator and having the FOMO because you're trading so well and you're going, man, I should be in this combine. Man, I should be in my live account. When in fact your coach has told you you don't have the information yet. You don't have the data collected yet, right? Another FOMO, another type of FOMO that is a big struggle is you've hit your daily target for the day and you stick around. Now, stick around can mean anything, but do you leave your trading platform open to where you could take another perfect trade if you see it? That's another form of FOMO. Now that we've explained the FOMO, what I want you to do this week is every time you see one of these different types of FOMO, bring it to your attention, write it down, have it in your own handwriting, and own that FOMO action that you're doing. Okay, now let's talk about last week's price action. If we look here, we really took a giant leap forward with the NVIDIA earnings type situation. I want to remind everyone that is not why the stock market went up. Okay, it wasn't because of NVIDIA. It's for the simple fact that the shorts had to cover. The path of least resistance is higher. If everyone that owns the shares is not willing to participation in the price discovery lower, the only thing that's moving shares lower or the stock market lower would be the shares that trade. All of the Vanguard funds and things like that, they own all of the shares and they're all working together to not sell. They fully understand that the value of their dollar is worth less, so they have to create the value proposition that beats the inflation that decreases the value of the dollar, which is what they're purchasing their stocks with. The hedges have to unwind. If they're hedged, obviously a hedge here would be a short. If they have protection on their portfolios and it pushes like it does, they have to unwind. That's the way that it works. I want to remind everyone that the pundits fuel rallies. all the people that you're following on Twitter that are talking about how the stock market's going to collapse in the next 12 days, they are insolvent at this point. Remove them from your Twitter feed. You don't need them. We don't need it. That was last week's news. That was never going to happen. Okay. And then the last thing I want to bring, just remind you of, as we've talked about several times before, the value of the dollar is decreasing. The stocks are purchased in dollars. So the price of the stock is going up. It doesn't necessarily mean the value of all of the stocks are increasing at the same price. Okay, that was last week's price action. Let's take a look at what it means for this week and what we're going to do, what we're going to look at. The first thing we want to do is we want to look at the news release here, news releases and numbers. I don't see really anything besides core PCE unemployment claims on Thursday. Wednesday morning, we have GDP, 0830 hour Eastern. Mandatory, that's going to move. What we want to watch for is any sort of larger bond auction price action that transfers over into our territory, which is the ES contract. Back to the daily chart. Just a massive push, flag, break. Is this a hidden RBI or is this a topping reversal bar? I'm not placing any wagers on it. I want it to tell me before I do any sort of trading. We can see that it's been very, very smooth following up this channel. We have the 20 simple holding back here in the middle of the week. All of my traders that were with me daily in the live trading desk, they saw me telling them, I'm not comfortable selling down here on the 20 simple, rising at all-time highs. Sure enough, we buy a call because it reverses on the smaller time frames, and we capture this whole move up. The entire bar from here to here, we were able to capture. We talked about it, discussed it in the live trading desk. It was a thing of beauty. A lot of people were able to understand my explanation of why we were doing it and how we took advantage of the situation. It was wonderful. It was beautiful. Let's take a look at the 4-hour chart. The first thing that I see that pops out, aside from 1, 2, 3, 4, 5, 6, pause, 7, pause, 8 green bars, is I am looking at this swing low and this swing high of 66.50. Okay, so if we come back down, which is very plausible, we're going to be watching the 66.50 level all the way down to the 59 level. Between 66 and 59 would be our support zone, prior supply zone, which could be demand. We're going to find out. This right here reminds me of the FOMO, of the opportunity cost short here. Talk about it real briefly. The opportunity cost of taking a short on this is you're going to miss the long. Okay, the amount of money that you could make shorting is less than the opportunity of the long on a pullback. We don't want to go 47 green bars, miss the whole thing, and then take the short at the end. That is a recipe for disaster. When I was a losing trader, that's how I lost all my money every single time. I was the guy that would call the top. The people in the room would go long the second I called the top. This is what Patrick calls the Loch Ness Monster. You have the perfect pattern. Does it come back for people to get a chance to come into the market, new traders to come into the market long? Or does it just keep pushing on? That's what we're waiting for. That's the answer that I need before I can execute my trades. We don't guess. Okay, let's go to the 15-minute chart here. Okay, so now here's where old losing Rev starts getting really excited about shorting. But see, he didn't short the top. No, no. No, no, no. He didn't short the next leg down. No, no, no. No, no. He's going to short down here. What happens to old losing Rev 94 out of 100 times? He loses. So old losing Rev is looking to short this break. Winning Rev will be looking for some sort of reversal pattern to go back to all-time highs. Now remember, I'm not going to just enter as it comes down here. If we get some sort of reversal on the 15-minute, the 4-hour, or the daily chart, I'm going to go back into my 2-minute chart and I'm going to execute the next trade that fires. This is how we trade wider time frames. A little Sunday night tidbit for you. If we see something on the 15-minute chart, which would be the pattern repeating that we see in the 2-minute chart, what I'm going to do is I'm going to wait for my 2-minute chart to give me my next pattern. I'm going to execute that in direct relation to my 15-minute chart. That's how we enter on a wider time frame. I want to point out, next week, we don't trade the charts as if it were last week's charts. We're going to come in tomorrow morning, Monday morning, we're going to identify the range, we're going to identify the direction and the trend, and we're going to trade our pattern repeating in between the levels that we have predefined, whatever they are. We're going to start doing this every Sunday. I hope it's very helpful. I find it very relaxing. You can see I'm very relaxed. This is great. We'll see everybody in the room Monday morning, 8 a.m. Thanks.